On that, let's take a look at the markets now. I'm joined by Michael Casey, Dow Jones Newswires Managing Editor.
Hi,
Any news on Boeing this morning?
Yeah, well, Boeing's certainly one of the big ones out there, and this is going to be, we'll have to see how the shares play out in this, but it's going to be quite a shock, I would think. The big news really that's moving the market this morning is actually economic data. We've had housing starts out, which were up 12.5%, significantly larger number. Now, there's probably some Sandy, Superstorm Sandy effects in that, right, but nonetheless, it's a really strong sign that construction is picking up, and that's of course a potentially big driver for the economy. Jobless claims as well, down 37,000, down to 335, and we were looking for 370,000. That's a really good sign that that jobs are starting to pick up, an improvement in the labour market. Again, there's seasonal effects at this time of the year. We don't know whether this is affected by the holiday hiring effects and so forth.
It's a five-year low for jobless.
It's a five-year low, and similarly for housing starts, I think it was since 2008 as well. So both of those numbers very strong, and the markets have responded really positively to that. Treasuries are down, stocks are up. That's the sort of the pattern when this comes out. But of course, we're in the middle of earnings season, yep, so we're looking at quite a number of key movers there.
Any big stocks you're looking at on the earnings
of course, you just can't avoid the banks at the moment. I mean, the banks are really where it's happening. Two of the big ones out this morning, Bank of America and Citigroup, both disappointing the market, but it's a really confusing picture because both of them have like a host of legal charges, as we would know as we've been reporting. Right. There's been a lot of settlements with in place over the ongoing mortgage issue, 4.5 years now of this, but those banks in particular have had to lay out large amounts of money to settle claims over their handling of the mortgage crisis, and that's all rolled into their numbers and confusing the picture a little bit. And so the stocks are both down. They've both missed expectations at the operating profit level. But underneath it, there's an interesting trend. I mean, yesterday we saw Goldman and JP Morgan surprising to the upside, largely because of a stronger performance in their capital markets division, but interestingly, as much driven by cost savings in terms of staff as anything else. Wall Street is actually taking less away from they used to from the revenue, and more is going to the shareholders, and that's an interesting trend.
Moving over to tech, can I jump in?
Sure.
Intel you're watching as well.
Yeah, Intel's out later on after the bell. Intel has obviously always been an important bellwether, but it's been a real dog of a stock of late, and there's a real reason behind that, and that is that PC sales are not what they were. Gartner came out as a key consultancy that watches these things during the week and said that the fourth quarter PC sales were down something like 3.5%, I believe. So that's not likely to show very well. Right. One other quick point, since I'm an FX guy, I can't help but mention that dollar yen is back on the upside, largely because of a story that we broke, the economy minister talking once again about their concerns about excessive yen strength.